Oil continues to attempt to build a base. Before we start, a quick word from our sponsor. This video is brought to you by FXEmpire, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The light sweet crude oil market has shown itself to be somewhat buoyant during the early hours on Wednesday, but really at this point in time, if you see a bit of a bounce, I think you have a situation where sooner or later sellers jump back in. This is a market that has been extraordinarily weak, and it's worth noting that previously the area between $60 and $62 had been support, so I would anticipate that it ends up being resistance. I do not like the idea of buying oil at the moment. It just has proven itself to be far too weak, and we of course have oversupply coming out of OPEC, Russia, and the United States at the moment. Although it's worth noting that OPEC added less than anticipated recently, but it's still too much for what the market can handle. It's not until we break above the 50-day EMA that I begin to think about being bullish, and we're nowhere near that right now. Brent markets look very much the same, with the $64 level being the beginning of a zone of support that runs to the $65 level. Ultimately, it does look like we are a little oversold, so I think a little bit of a relief rally makes sense here as well. And if we can get anywhere near $65 with an exhaustion candle with a long wick at the top of it, I'm more than willing to jump in and start selling. I just don't have any interest in buying crude oil at the moment, and I think you've got a situation where if you're patient, you might get a nice opportunity to short again. Range-bound traders may muck about in this area, but for me, it's just shifted from a sideways range-bound market to one that will have the occasional bounce that will almost certainly get squashed. My name's Chris. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe to the channel for more analysis.